Hello, I'm Andy Agathangelou, the founder of the Transparency Task Force. For those of you that don't know the TTF, we are a large international organization campaigning to help reform the financial services sector. To be more precise, our mission statement as a certified social enterprise is to promote ongoing reform of the financial industry so that it serves society better. We're international. Of the 4,000 or so members, they are in 21 countries around the world. And the internationalization of the Transparency Task Force is largely down to the work we did in 2019, when we ran meetings about the work that we do in Dublin, Amsterdam, Zurich, Brussels, Hong Kong, Singapore, Sydney, Melbourne, Washington, DC, Boston, and New York. And what we found on the international side of things is that we really do have common issues around the world in relation to the sorts of issues that are of concern to us this evening. As you all know, tonight's session is about the mortgage prisoner scandal and why it still really matters. We're emphasizing the still because we really do need to make sure we maintain momentum about this particular problem. It's not a problem that's going away, and it won't go if we give up campaigning. We need to persistently campaign as best as we can. We're especially pleased that this evening we have Martin Lewis with us. Martin being the founder of moneysupermarketexpert.com, a very, very well-known, and quite rightly so, a very well-known campaigner and broadcaster in the space. Martin has, for a considerable period of time, been campaigning to help the mortgage prisoners get the justice and the recognition and the fair treatment that they deserve. I'm going to pass over to Martin now. He's on a very, very tight window, so Martin will be here 1 minute and gone the next. Martin, we are especially pleased that you have found a way to take time out of your very busy schedule to be with us. Martin, please, I'll be delighted to hand over to you. Thank you very much indeed. Thank you.
Thank you so much, Andy. It is a tight window indeed. It's about, what, that big?
That's right.
About that? There we go. Just about the right size. Hello, everyone. I would absolutely echo that the mortgage prisoner scandal still matters. And the stress is on the still. And in many ways, it's a no surprise Sherlock moment that it still matters, because there has been no solution whatsoever put in place over the mortgage prisoner scandal. There are 250,000 victims of the 2007 financial crash, which is now seeming a long, long time ago. You know, I've campaigned on many other issues since then. We've recently had the excluded, and I suspect there'll be some crossover, the excluded groups from HELP who have been unable to get a form of financial justice. And it seems inherently wrong to me that we bailed out the banks, but we still left this up to 250,000 people, possibly more, who are the victims of the way the banks were behaving at the time of the financial scandal. Now, MoneySavingExpert.com and I have been campaigning on this a long time, both together and independently. And I think brutal honesty, knowing there are many mortgage prisoners here, is always the best way. I wish I could say I saw a clear and clean path to fruition and help. I don't. Frankly, we're dredging through a muddy and boggy field. And my view is the best chance we have of getting towards the end of this is by accepting and understanding that we have to make it as easy and as possible for the government to fix this. If we go fighting and bashing them over the head, the numbers and the volume isn't loud enough for this to cause a scandal, and the scandal of the type that would get them to do a volte-face U-turn. The great concern the government have, I don't share it, but I accept that they have it, is one of moral hazard. Why should we help these people when we don't help other people? Why should we give these people better rates than we give other people? Now, look, so the strategy I've adopted is a simple one. The way you get governments to work is you give them answers that are easy, that are costed as cheap as possible and cause as little friction as you can. You go as loud as you can to make sure that they realize there's a reason for doing it, but you make sure the solutions have as little friction as possible. Now, this type of complex macroeconomic and microeconomic solution is not my expertise. I can see there's a problem. It's not my specialty in coming up with detailed technical policy solutions in the mortgage market to fix it, which is why, was it a couple of years ago? I can't remember now, or a year and a half ago, I paid the London School of Economics Research Department to come up with a report on this. A detailed report it is too, but and I'm sure many of you know about it, and some of you have read some of the things that are available. But when we got to it, they came back and said there's an impasse. And the impasse was quite simple. There isn't enough data available to be able to cost it and to give real costings on the policies that were out there. And because of that, you know, we went back to the government, went back to John Glenn, who I know is somewhat demonized in these forums and in other places. I'll be honest, in my experience, I think you actually have someone there who is warm to helping compared to many others who are completely cold to helping, but he's warm to helping within the bigger picture of the government that he is a part of. So we have to find a solution that's going to work and he's going to be able to sell it through. We went back, we pushed hard, we had a lot of toing and throwing. Will, who's on this, who works with me on this, has spent a lot of time on trying to push to get us access to the data, both from the parent companies who own the mortgages and via the regulator and via the Treasury, and each one told us no, the other one has it. And it's been a very long time in coming. We now think we have the data needed. So I've funded the London School of Economics to do a research department to crunch the data to see if we have the data needed to fill in the answers that were left blank after the first research. And if we have the data needed, then we can going to have to do another project to put that data into the first piece of research to do the costings. I'm explaining it to you in this rather deliberately turgid fashion to understand that there is process underneath all this, that we are continuing to work on this, but it isn't easy. It really has not been easy to get to this point. And I know that there was a lot of hope given for the APPG and the suggestions from the all-party parliamentary group. It was a difficult one for us because we felt it was never going to happen and there was absolutely no chance of the government accepting it. That's the truth of it. I did say it at the time. What I publicly did is welcome that as an option because I didn't want to put my foot down and stamp and make it look like I opposed it. It's not that I opposed the solution. It's just I thought it wasn't one that was going to win, and we have to try and get one that's actually going to win and be accepted by the government, or there's no point. So I gave it support and said in the current, in the way it's working at the moment, because it went against what the LSE report said, I would happily welcome anything, and this seems one solution that would work, and try to be as positive as I could, and was positive on it. But I worried that a lot of people were pinning their hopes to that when all the feelers we had out from the government were saying there was not a chance in hell that was going to go through. I need to be straight. Which is why I'm afraid it's not the quick, nice path that we would all want. We're still trudging the dirty, mud-filled road. We're going to continue, and it's let's be honest, it's Will who's on the call here. It's his feet that get dirty, not mine. I put the money there and I get involved in the conversations and I push when it's needed to make things happen. But underneath all this, there is policy and process and research that needs to happen, and it is going to be slow. And even if we get every single bit of that done, we are going to need all the firepower and ire and case studies and a righteous indignation that you all have to try and push and get the headlines and to get the noise and to embarrass the state, because it is the state. This isn't just this government. This has been going on far longer than this government. They're the ones in power at the moment, but they've all been custodians of this to make it happen. And there are no guarantees. But I'm here to say I'm still supporting. I'm still happy to keep funding the work that we're doing, and I will fund, if this one works, I'll fund the next one to get us to get the answers that are coming forward. And Money Saving Expert and I will continue to be shouting loud about this and pushing on your behalf. But in this room, which I know is mostly mortgage prisoners, What I need to do is manage expectations that no one should think there are going to be any quick wins here. I would take for a slow, turgid, drawn out win. I think if we could get that, we would have done very, very well. And we got to cross our fingers. That's the truth of it. I'm happy to take a couple of questions. If it's technicals, I'll bring Will in because he's the one who's looking more on the technicals than I am. And I just want to say, you just got to keep your chins up and keep going. This is not over. We cannot let it be over. And we have to keep going, as difficult as it is to see everything else and all the other support measures that have been poured out during the pandemic, and mortgage prisoners have been somewhat ignored during that. But we need to keep going. We will keep going. And there is hope of some form of resolution, I think.
Martin, thank you very much indeed. I think it's only appropriate, ladies and gentlemen, that the very first thing we do before we go to any questions is simply to show our appreciation for the personal and organisational work that Martin and MoneySavingExpert.com has been doing around this very, very complex and challenging problem to do with the mortgage prisoners. Can we please show our support and our appreciation for what's already been happened, and also, of course, for the commitment and the indication that Martin's just shown about his willingness to carry on with the fight, with the battle as well. I think that's absolutely superb. It really is. If only there were more people like Martin around, we really wouldn't have the kind of problems we have now. Martin, thank you very much indeed. We have a hand being raised by JP Ngeli. JP, could you please just put your question? And if I could invite everybody to be very, very succinct with their questions, we get through a few. JP, over to you, please. Thank you very much.
Thank you very much, Martin, for your time, and thank you for organising this call today. My background is in investment banking, so I understand how this works. I think, what is the absolute consideration of outstanding mortgages, you think, for mortgage prisoners? That's one question. And secondly, what do you believe is the biggest pain point in aggregate for the mortgage prisoners out there? Is it remortgaging? Is there one pain point that seems to be the common spearhead for most mortgage prisoners out there?
I'm not going to give you an answer to the first one. That's part of the problem. We don't know. We don't know how many mortgage prisoners there are. We struggle to get an exact definition of what would count as a mortgage prisoner, and the data of how much they owe is something that has just not been available. That's part of what the LSE is number crunching at the moment. And until we get an answer on, until we get data on that, I can't give an answer at all, I'm afraid. So that isn't me obfuscating or not wanting to answer your question. It's literally, we don't know. And that's been one of the problems here. The data isn't out there. As for mortgage prisoners themselves, what the biggest pain point is, I think this is individualized. And I tell you one of my main concerns here. So one of my main concerns here is that there's been this sort of moral differentiation between the mortgage prisoners who are in arrears and the mortgage prisoners who aren't in arrears but can't remortgage. And that seems to have been, there's almost like there's a split when the FCA and the regulator and the Treasury talks about it. You know, when we talk about the good guys who've managed to keep up all their kept up all their payments, and we should help those. And then there's, well, they've been in arrears, haven't they? They've not managed to pay. And first of all, the part of answering your question is that shows that there is, you know, this is polemic, that no one situation is the same, and it is different for many people. But I think we have to be quite careful here. Causality is a very difficult thing. But it is clear to me that if you have a catastrophic problem with your mortgage, which is what mortgage prisoners do, then a single catastrophic problem of your finances will snowball and can cause your entire financial situation to crumble. And therefore, you know, a decade later, having had to live with a catastrophic piece of finance for a decade, it is not surprising that quite a chunk of mortgage prisoners have had arrears. Now, what was very difficult to do is to reverse engineer and say, what is the cause of the arrear? Is the cause the mortgage prisoner problem in the first place? Now, my suspicion is for many of them it is. For many people who have arrears from their mortgage, it's because they're mortgage prisoners. And so you have a vicious circle that has trapped some people in. Now, arrears are going to be a big pinch point when we get to this. I think you're going to find that the government is more willing to help those who have managed to keep up their payments. And so therefore we have to be quite careful to be able to push back and say, well, hold on a second, let's look at why these, if the cause of people not being able to keep up their payments is the mortgage prisoner, is the mortgage prison, is the cost that they've been paying, is the ridiculous rates that they have been unable to do like everybody else has and go and get a cheaper rate and play the mortgage market and get the cheaper form of borrowing, then we can't hold that against people, because that's the nub of the problem in the first place. So if you ask me what the pinch point is, I think arrears is going to come forward to be the pinch point going forward. But for everybody, I mean, it's just keeping your head above water, isn't it? I mean, that's the problem. If you're paying an over-expensive mortgage, if your finances are strong enough that you could cover the over-expensive mortgage, frankly, you wouldn't and shouldn't be a mortgage prisoner anymore, because you'd been able to move yourself out of that.
Thank you. Just because you didn't answer the first question, very quickly. When you say a turgid and trudge forward, do you then believe that if a solution is found, it is backdated? Or because at some point in time value of this means you're at the end of your mortgage. If you think that it's another 10 years and people came into these mortgages, say in 2005 or even 2007, there's a point at which you just have to, you're facing the pain to the end of your mortgage. How do you then get compensated if you get to expiry before a solution?
I wouldn't even be thinking of compensation. Right. Well, I can't see a chance in hell of compensation. Right. Again, please, nobody, this isn't what I would do. This is what I think is a rational way that the government will, the way that I expect a rational view of how the government will operate. And my answer to that is, I think the government, the best thing we can hope for is the government to come up with funding to improve people's current situation to allow them to be in a better market, not to compensate them for the losses and the problems that they've had in the past. Which is why I raise the arrears point, that what we don't want to happen is for them to say, we will come up with and get people out of this as long as they've not had arrears, because I think that would be an unfair solution. But I don't think that compensation will happen. As for another 10 years, well, look, I mean, then this is not, if we're still here in 10 years, we've failed. I mean, there are interesting things coming. There's probably, the talk among the chattering classes is a general election in May 2023. Right, or possibly before that, possibly a couple of months before, because that's when the tax changes come in. So, you know, dealing with this current government, there may be, or there may not be, depending how a vote goes, a time limit on how long we have to work with them. And then if there were to be a new government, depending on the hue of that government, you may have to start again, but then again, they may be more receptive. My hope is that we'll get somewhere, and I know you'll find this funny. My hope, John Glenn, within the government, is probably the best chance that we have, because he has said he wants to find a route, if there's a route that doesn't cause moral hazard in the mortgage market and doesn't cost the government too much money. And compared to some of the others we have out there, he has at least said he wants to find a route. So there's a lot in this. He hasn't moved in the reshuffle. You know, there's a lot in this, but that's why I say this is a trudgy, mud-filled path. As opposed, this is not going to be straightforward and easy and simple.
There's real value in the candor and the honesty and the straightforwardness of your answers, Martin. It's wonderful to hear such directness and such openness about the reality of the situation, because of course so much about this is really about expectations and what people could realistically hope for. Thank you, Martin. In which case, what I'm going to do, Martin, I'm going to put a question to myself, please, if I may, and I'm going to show you something relating to some data that you may or may not have seen before. It's very general information. It's not specific to the UK, but it is going to show a picture that I think you might find quite interesting. So what you're looking at here, Martin, and everybody else, is a table showing the amount of fines against different industries. All this data goes back to the year 2000, and it's fines against the US authorities. And it's a table showing the different industries. And it may or may not surprise yourself and or others on the session tonight that the worst offending industry, according to the number of fines against it and the value of those fines, is actually the financial services sector. In fact, the the amount is quite a remarkable figure. The total number of fines against the financial services sector since the year 2000 is $338,588,571. And that's a huge number. I think it's larger than some countries' GDPs. And to put it into perspective, if you add up all the other fines of all the other industries, financial services is roughly equal to the sum total. So the very, very general point I'd like to put to you, Martin, in fact, it's kind of a question is, do you think the financial services sector is doing enough yet to win the trust and confidence of the public? It seems to me that internationally, the financial industry needs to work harder at actually being more transparent, more truthful, more trustworthy with consumers as a whole. It's a very general point, Martin. Any thoughts about that? Thank you.
I'm not sure that you can do a read across from the US situation to the UK, to be honest. They have an entirely different form of regulation and within their financial services market. I would say over the past 20 years, and probably the last 10 years more so, that financial services in the UK has become more trustworthy, but probably less trusted, which is an interesting juxtaposition. Yeah. Now, the reason it's become less trusted is because the prior scandals, such as mortgage prisoners and such as PPI and such as packaged bank accounts, have all been so, pushed and promoted by the likes of me when it's coming about free reclaim campaigns and by the likes of the claims handling companies to push out there. And we have been living with the money that's coming back. And there's an absolute example of the classic thing I've been saying for years. When you go into a bank and it says salesperson, you have to, and it says advisor, you have to read that sign as salesperson, because their job is to sell to you, not to advise to you. Now, culturally, because of all these scandals, and there's been a much greater risk aversion in recent years, I think, from banks at the top, and it's important at the top, to scandals. I think they know now that it is more likely they're going to have pain afterwards if they try and do things that are a bit dodgier. There's a culture of shifting away from commission-based incentives. I think that's come from the top. I don't think it's reached its way down to the bottom yet. And there is a change of attitude at the regulator to an extent that has helped. Now, let's just be careful. When I talk about this, I don't talk in absolute terms. I talk in relative terms. So more trustworthy, yes. Less trusted, yes. I still think, and I would always, and it would take a long way for me to change that, one should, when you're dealing with a financial services institution, always do that with a level of skepticism that what they are saying is what's right for them and not what's right for you. And I think don't see any reason to change that basic outlook. The first thing, their job is to make money for their shareholders. Our job is to look after ourselves. And I don't think anything has changed there. But I think some of the outrageous, outrageous behavior that went on through the 80s, 90s, and to an extent in the noughties, I think probably still fair to say in the noughties, is no longer as in your face and no longer as scandalous as it was back then. Now, this doesn't mean that they're all good guys and there are no problems and we won't have any more mis-selling issues. I can see Nicholas there. I'm sure he'll be he'll have some views on that. But I think in terms of direction of travel, less trusted, which isn't a bad thing because they were too trusted in the past, but more trustworthy, which isn't a bad thing because they shouldn't have been trusted in the past. And there is a little bit more straightforward now.
Wonderful. Thank you very much indeed, Martin. Let's once again show our appreciation for Martin's attendance and all the campaigning in front of the scene and behind the scenes as well that's been going on over a considerable period of time. Martin, we really salute the work that you've been doing. Thank you very much indeed.
Thank you for having me, everyone. Good luck. Bye-bye.
Thank you very much. Thank you. Okay, folks, that was a real privilege to have Martin with us. It's great that he's been doing the work that he's been doing. Does anybody else have a question they'd like to ask? We're going to go to Nicholas Wilson, who once again the TTF has got to know quite well over the years. Nicholas, over to you, sir. Take us off mute and share your point. Thank you very much.
Thanks, Andy. I was going to ask Martin, but he's gone now. But I was Rachel might be able to help with this. I was interested in Martin's comment about there being no chance of compensation. And I have to admit, I sort of agree with him, which is why I'm sitting on the fence to join the Harkers Parker action, because I don't know where they've got to with it, and I don't know where they can go with it. But I have no idea who you would make a claim for compensation against. I mean, the mortgages have been sold on so many times now. I just don't know who the cause of action would be against. If anybody has any ideas on that, I'd be very interested to know, because that determines whether or not I join the action.
Would Rachel or anybody else like to briefly comment on that particular matter before we move on?
It is really difficult, because as somebody that is signed up to the legal action, obviously you have to sign clauses, and when there's updates around what is going on with that legal action, I believe that Martin was talking about compensation directly from the government. And again, it's very difficult, because Harkers Parker aren't just looking at one avenue of compensation. They're looking at different ways of getting compensation. And as I say, they will be at a point, I would imagine, where they can be far more open about the actual court case. But the issue is, at the moment, from my point of view, is I'm legally bound that I'm not allowed to actually speak about, where that action is going. But from my point of view and how I understood it, and please tell me if nobody else understood it in a different way, that Martin was talking about direct compensation off the government that would purely give you a voluntary, well, you've overpaid all these years, so therefore we're going to compensate you. My word, if the government would ever do that, we can't even get them to give us a fair mortgage, let alone compensation for all the times that they've, what they've done. So maybe somebody else has got a different thought about it, but that'd be mine.
All right, thanks.
Thank you, Nicholas, and thank you, Rachel. In the meantime, could I please invite Heather Buchanan to take the stage, so to speak. Heather, thank you very much for speaking out of sequence, as it were. In the meantime, Heather, please take the time to share with us your thoughts. Thank you very much, Heather. Thank you.
Thanks very much, Andy. For those of you that don't know me, Heather Buchanan, I'm Director of Policy for the APPG on Fair Business Banking. So Dominic, who you hear from later, provides the secretariat work for the APPG on mortgage prisoners. But interestingly, we got interested in this, we kind of found this intersection, because in the business world, unfortunately, we've also found, and there's some familiar faces on the call here today, that the kind of general sale of debt to unregulated entities is something that we found within the commercial world as well, and is kind of I guess the selling on of relationships is a relatively new thing. And we've always been able to sell on debt or securitize debt, but the selling on of relationships is something that's caused us a great deal of concern. I mean, I would probably say, I agree with Martin on some points around, the kind of the fact that we need to find something palatable and attractive for Treasury to we need to give Treasury kind of an out into the from the situation that they're in now. And yes, we always knew that the SVR cap was going to be quite a hard stretch, as it were. But I think the important thing to remember in all those situations is, by the process of just keeping at it and keeping going and keeping engaging with your MP, it is, in politics, unfortunately, kind of a death by 1,000 lashes. So the more kind of lashes that we can keep on putting forward, the better. So, I mean, first and foremost, everybody that's writing for MPs, thank you. If you haven't written to your MP, please do. It does actually make a difference, but you do have to be quite determined about it. I agree with, again, Rachel, as you had just, with regard to the compensation thing, absolutely right. I think that Martin was thinking about the compensation directly from the government. And whilst I think we've certainly taken the position that it's quite obvious that this situation is a direct result of that, it's difficult enough to get them to listen just to the stories here. And I think the thing that we really, really need to hone in on, and again, this is something that Martin said, is what are the consequences? What are the consequences of being stuck and having no financial mobility over a period of 10 years? And the more that we can build that story back, and that, again, the report that the APPG on mortgage prisoners did, gosh, was it earlier this year or was it even last year? All time kind of melds into one anymore. But the report about the nascence of where the problem came and the effect that has had on people, not just now, but even the cumulative effect over a series of years, is really the harm that we need to be able to kind of capture and, in a very analytical way, put down on paper. And I'm hoping when we hear from Ala a bit later, that we can hear a bit more about some of the research that she's done on that. But critically, it is just making yourselves heard as consistently as possible, and really, really, really honing in on what are the consequences of spending of not spending £300, a month extra because it's been going to your mortgage, and has that potentially put yourself in a position of arrears. That is really, I think, the heart of where we're having to go with battling the government, particularly on the arrears, the position for people in arrears. And I was just going to say, so we spoke with the FCA last week, and this is a really important point that we've been trying to put forward to the FCA, is that, and something that Martin had brought up here as well, is that generally speaking, if you see, the FCA can and does take action when it feels that when it feels like it needs to act on something. And the point that we've made to them is we find it very interesting that in cases such as the payday lenders, which were actually sat outside their perimeter, they were able to act quite quickly because they identified vulnerability. And so we've really stressed the point to them about the fact that they seem to be, with mortgage prisoners, almost doing the exact opposite and kind of not addressing the vulnerability issue and only going for the kind of low-hanging fruit, as it were, and soft relaxation of rules. So it's a spectacular complex area. I mean, we do have a lot of pushback from Treasury on this. And the only way, in my experience, of getting some movement when you've got this really, really heavy thing is pushback, is keep on going back to them over and over again with facts, which we've been doing and which Rachel's been doing. Engage with your MPs as much as possible and get them on board. Engage with them productively and respectfully, and just keep on putting your points across. And again, Rachel and her group are fantastic about kind of providing that ammunition that you need to engage with your MPs, and critically make sure your MPs engage with the APPG on mortgage prisoners, get things moving forward, and as much press as possible within this. So we'll be looking certainly for more opportunities in the near future to bring press into this. There's a lot of stuff that sits underneath this in terms of whether or not it's right to be selling books on to unregulated entities at all. We have a very firm view on that, obviously. But unfortunately, unfortunately, in this kind of journey of trying to get justice and I'm not even going to say compensation, but justice, even being able to move on to different rates, there are some fairly large kind of ideological battles that are going on underneath it that really kind of are not helpful, unfortunately, for people that are feeling the brunt of this on a day-to-day basis.
Heather, thank you very much indeed for sharing those thoughts. We'll go to around the questions and comments for a few moments. I can see Mr. Richard Seddon has his hand up. Richard, could you very, very briefly introduce yourself? Turn on your video if you can. It would be nice to see, if possible, But then, Richard, please make your point to Heather. Thank you very much.
I mean, you obviously know, but I'm also a utilities prisoner as a direct result of being a mortgage prisoner. Are you guys aware of that? I guess is my simple question.
Richard, could I invite you just to elaborate on what you mean, a utilities prisoner, first of all? Frankly, that's the first time I've heard that term, so it may be that others haven't heard it either. Explain what you mean.
So you go into arrears with your utilities because you've gone into arrears with your mortgage, and then by utilities, gas, electric, and maybe others, then you can't get the better deals because you can't move supplier, and that is also a terrible nightmare. And it's only going to get worse now. So as a direct result of being a mortgage prisoner, I'm also a prisoner of other things that I call utilities.
So I hadn't heard the expression before, and I hadn't really. So no, thank you for kind of bringing that up.
I've just made up the term, but yeah.
But yes, exactly. Well, it's something we can. Well, bearing in mind what's happened in recent days, I dare say that the situation with energy prices is only going to be even more fluid moving forward. Now, one thing, and apology, I'm going to think completely off the top of my head here. One thing that I think that I think we should try to kind of move forward with, and this has kind of been a result of a conversation I had with somebody at Equifax recently, is the fact that actually these credit companies do actually have all this data, and they hold all of our historical data. So what might be an interesting proposal or prospect, which we have to do with people's permission, is to see if we can somehow do some case studies that essentially do kind of turn the clock back, as it were, because you can actually look through, and it's, as we said to the FCA, it's a fairly, particularly for people in arrears, it's quite an easy calculation. If if you're £10,000 in arrears and you've overpaid by £40,000, and you've got another £10,000 of other debts, it's a pretty easy calculation to see that if you hadn't been paying X amount over so much time, you'd probably be in a better position. But this is, I think, this type of analytical work where you bring that back to the beginning is going to be incredibly important in making our case.
I mean, I would say £70,000.
Yeah.
Who can find that? I mean, and somehow I've managed to do that so far, but I'm just coming to the end now.
Yeah.
And that's really the irony of this situation, isn't it? I mean, I've not personally had any issues in terms of being a mortgage prisoner, but when I talk to mortgage prisoners and they explain to me how much more money they're having to spend each month because they are mortgage prisoners, and they are, in the majority, somehow finding a way to do that, it really is quite heartbreaking to hear what they've having to sacrifice to keep up with the payments. And of course, not everybody can do that. Some people do find themselves going into arrears. And I've never directly thought about the point you're making, Richard. You're making a very interesting point that becoming a mortgage prisoner increases the likelihood of you becoming trapped in some other debt spiral. Debt is a real problem, of course, in general terms, but fundamentally, there's nothing sort of fundamentally wrong with debt. I mean, as long as it's fair. And I make this point because some of you may or may not know the Transparency Task Force has 25 different groups of people that we are involved with and campaigning for, etc., etc. And one of them is the group that we call unfair debt. And mortgage prisoners is not, of course, the only form of unfair debt that's around. We're focusing on three primary areas. One of them is what we generally describe as predatory lending. But in my personal experience, the worst kind of predatory lending I've come across and I've been told about is divorce funding loans. You would not believe what is happening in the divorce funding loan space. People are being totally exploited in a very opaque and non-transparent and non-fair way. It's a huge problem. One of our members is doing a lot of research in this space and is helping to bring this particular issue to the surface. And another issue that more and more people are becoming aware of course, is is buy now, pay later. That's been a huge problem in Australia, like, you know, a massive societal problem in Australia. And it looks like the same sorts of issues are arising in the UK as well. And of course, the mortgage prisoners is equally unfair and equally grotesque in the way that it's being dealt with. Personally, I simply think the government was reckless when they transferred the books away without taking adequate caution, without taking adequate precautions to make sure that the companies that were buying those debts were not going to be exploitative. But they have been. So to my mind, the government's at fault here. I think the government was wrong to not carry out appropriate due diligence and checks and fundamentally treat customers fairly. It's a big, big problem. We're going to go to Alan and then to Andre. Alan, to you. We've not known Alan for very long, but my oh my, we had a great conversation the other week, which is going to stay with me for quite some time. Alan, could you first of all please briefly introduce yourself and make your point? Alan, thank you very much.
Yeah, my name's Alan Campbell. I'm the founder of a not-for-profit called Debt Hacker, and Debt Hacker is focusing in on unaffordable payday loans. And essentially what Debt Hacker was looking at circumstances where the consumer were unaware that they were a victim of unaffordable lending. And I was invited along to this chat tonight by Andy, and if I get this wrong, allow me that just latitude. But it would seem to me that the circumstances of mortgage prisoners are really victims of unaffordable lending, because back 10 years ago, they were given mortgages which ultimately now they can't afford, well, they wouldn't meet the affordability of mortgages today. And therefore what I'm saying, it strikes me that those victims have recourse against the banks that issued them the mortgages, not the banks that actually took the debt and then took that debt on and continued to service it. Because those banks, albeit American hedge funds, would argue that we don't meet, or the mortgage payer doesn't meet today's requirements for a loan, and therefore hands up, we can't do anything about it, which is very convenient for them because it allows the consumer to be trapped in that perpetual cycle of paying too much. But it would seem to me that you have something obvious in that it's an unaffordable loan, and the legislation in respect of unaffordable loans applies to mortgages as in the same way it applies to payday lenders, Wonga, etc. They were all Provident just recently was brought down because of its unaffordable lending, and it went back 30 years. And I don't understand why that core unaffordability of what was the original loan is not being challenged, and maybe that's what the legal case is about, because I would anticipate it to be about that, going back to those lenders and saying, was it affordable at the time you gave it? And then in terms of solutions, it would strike me that I can't deal with the people who are in arrears, but if someone is being able to afford a mortgage just now, like the chap that was speaking that had £70,000, then even that unaffordable mortgage on an affordability basis, they can afford to do it. So they can afford to make those repayments. So if the government could create a fund that would allow people to swap out of really expensive debt and take affordable debt, then the risk to the government's about zero. You know, I mentioned to Andy the other day, I was at a conference some years ago, and Andrew Bailey was speaking at the conference. And Andrew Bailey was speaking about people who are in housing association rentals. And he was saying that you've got a situation whereby a housing association rental, a new tenant goes into a house, which is basically a shell, no carpets, no curtains, no white goods. They're assessed on that credit product for a long time. And the housing association assesses them and determines that it's affordable for the customer to meet that credit product. And then Andrew Bailey was making the comment, what the housing association is then forced to do is to send the people down to Bright House, where they're going to get completely ripped off at a high cost. And there seems to be an analogy here just now that nobody's, well, I don't know, I'm new to the sector, but mortgage prisoners are capable of repaying these mortgages, albeit it's a struggle and it's too expensive. And therefore, to that extent, by definition, I'm saying there must be a good credit risk. Yeah. Because if you can pay an expensive mortgage, then by my definition, if the government came in with a pool of capital, you could replace that with a more affordable credit. So I think there's parallels to be drawn between the payday lending industry and, as I say, Provident just recently went bust, and they'd been doing a bad practice for 30 years. Amigo went bust, and it was up for a 1.2 billion flotation, and it went bust. And that's because of the financial asbestosis. So that would be my only observation, Andy.
Thank you very much, Alan. I do think your term financial asbestosis really does capture some of the issues that we encounter. Alan, thank you very much. We're going to go to Andre next, who's going to briefly introduce himself, because I don't know what Andre's surname is offhand. Then we're going to go back to Heather for any final comments Heather would like to make, then we'll move on. So Andre, your point, please, sir.
My name is, I have an unusual, hard to pronounce second name, so I didn't bother putting it on, but it's Greisenbach. Yeah, I was remortgaged by an advisor back in 2005 when I didn't have any financial problems at all, and like so many other people, found after 2008 that it was what was it, Northern Rock, then Northern Rock Asset Management, I think it was, now it's Landmark Mortgages. I don't know how many other people are near 70 or maybe past 70, but I'm in the unenviable position where next month I'm 70 years old, and Landmark Mortgages have advised me that I have to repay my mortgage, and that it would be very easy to remortgage elsewhere. Which it hasn't been. I haven't been able to remortgage elsewhere. I've been to 92 different lenders, and even with the modified affordability assessment, and although I have my interest paid by Support for Mortgage Interest, part of the DWP, because I qualify for guaranteed pension credit, with all of this, I cannot remortgage. So it's something I would advise you maybe to consider, anyone who, like me, is a mortgage prisoner, that when you reach the age that your lender says, that's it, we don't want you anymore, you have no other alternative, like I have, other than to sell up. I can't find any other way. I've looked at retirement interest only. I certainly don't want to go down the reversionary mortgage system. Lifetime mortgage, I can't get the figures right for that. And I just wonder, is there anyone else who is nearing the age of their lenders saying, you know, you need to repay the mortgage, finding themselves in my position? And if so, are you having any more luck in finding a lender who will use the modified affordability assessment and accept that if you qualify for support for mortgage interest, then that's as guaranteed a loan or underwriting decision as you're going to get? I'm just wondering, does anyone know how to get out of this situation?
Well, Andre, thank you very much for sharing your point. Would anybody like to wave their hand at me, literally or digitally, if they have a response to that question? I wouldn't be surprised if there isn't an easy solution at all, because that's going to be very problematic. Rachel, please share your thoughts on that. Thank you for waving your hand.
Hi, Andre.
Hi.
It's a question that continually comes up, and there's people in difficulty, you know, such as yourself, and there is very, very limited help. The only thing, because it's really difficult knowing how to send you in what direction, because I don't know your figures, I don't know, you know, anything about your mortgage. What I'd probably do is I'll put my email address in the chat, and then you can give me an email so that we can, I mean, it's not ideal, but to give breathing space, we always try to go to Landmark and mediate to give you an extension on the mortgage. Sometimes we've been able to get up to 5 years of an extension. I've done that a couple of times now. At minimum, they'll give 2 years, and at most, I think we've done 5. It is, you know, it doesn't always help, and and that's something that you have to decide on. But unfortunately, without actually looking at the whole case, I can't really give you a great answer, but I can give you my email address that you can send things to.
That would be great. I don't know if you can still hear me, but yes, that would be great.
Yeah.
I'm totally up to date because my interest is being paid by support for mortgage interest. I've got a good credit history. I've got absolutely pretty much everything going my way, other than I can't support. I have no problem with anyone knowing. Property valuation is offers based on 675,000, and I have nearly a £300,000 mortgage, which was totally affordable before 2008, when I was earning good figures. Since then, it's been diabolical.
Thank you, Andre.
Yeah, so that's where I am anyway. Thank you very much.
Okay.
Thanks for your question.
I've popped it in the chat for you, Andre, anyway, so my
Thank you
email
very
address
much
is in
indeed,
there.
Rachel. Thank you.
Rachel, I think that's remarkably helpful of you. If you can help Andre, that would be great. But if not, he knows you've tried, and that's wonderful. That's all anybody could possibly ask for. Super stuff, Rachel. Thank you. Let's go back to Heather for any sort of final comments from Heather before we move on. And I really appreciate the tone of tonight's session. Everyone's being very realistic. Everyone's been very constructive. That's been lovely. Heather, back to you.
Yeah, I think I'd just like to pick up on some of the comments that I have seen in the chat about people getting frustrated when they get the kind of copy and paste email from that's from John Glenn that kind of comes back to them. So I would say, again, don't give up on your MPs, even though it's just keep on batting away at them with facts and facts and facts, and again, always using particularly the templates that Rachel and her team use. A good potential strategy as well, though, is if you feel that you're really not getting anywhere with your MP, offer to have them, offer a meeting with them and one of the officers of our group. So if they're a Conservative MP, then get Kevin Hollenrake in the room. If they're a Labour MP, we can get Seema in the room. We can kind of get it to the right party politics. But happy to kind of individually try to pick people off time and time again. So if you feel like you're not getting anywhere, please do ask for a meeting, and also offer a meeting where you can get some other MPs along, and that can also help as well. And again, just going back, this is going to be a very kind of long and arduous journey, which it already has been. But as long as we keep on going back with the facts, one thing that we do have on our side are the facts.
Heather, thank you very much indeed. That's another very, very helpful practical suggestion for people who may have run out of other ideas in terms of what to do. Can we please all show our appreciation to Heather Buchanan? Thank you very much indeed, Heather. Super stuff. Thanks, Heather. Really great to have you with us again tonight. Dominic, over to you, sir. Please take a moment to introduce yourself. I'm very grateful indeed that you're with us tonight. I know that you're feeling a bit poorly, so it's especially good of you to come along tonight, given the fact that you're rather unwell. Dominic, over to you. Thank you very much.
Thank you very much, Andy. And yeah, as Andy says, I'm feeling a bit ill tonight, so hopefully my voice will hold up. But yeah, definitely thanks to Andy, and thanks to you all for attending, and all the campaigners on this issue, Martin, Money Saving Expert, and all the UK mortgage prisoners, especially all the volunteers. And also thank you to all those who've given up time to speak to me and to share their stories over email with me and the all-party parliamentary group on mortgage prisoners. All of your emails are read, even if I can't, reply to them because I've got, nothing to suggest, but they are all read and kind of go into the knowledge bank as to what the APPG has been asking for. And so, yeah, as Andy says, I'm Dominic Lindley, so I'm Director of Policy at New City Agenda, and I also provide the Secretariat for the APPG on mortgage prisoners. And so I'm going to make some remarks, and so you should assume that these are my views rather than the views of any other organisations, although of course there is a lot of overlap between my views and the views of the APPG, but you should assume that everything I say tonight is my views rather than anyone else's. And I think, when I first started working on mortgage prisoners, I remember I was sitting with John McFall, who's now Lord McFall, and we were talking about issues we should get involved in, and we sort of highlighted that the government was selling off, the £13 billion worth of mortgages from Northern Rock, and we kind of thought, well, what safeguards are they putting in place when they're selling them? Because many of the customers will be vulnerable. So Lord McFall wrote to the Treasury, UK Asset Resolution, and the FCA, And he said that it was important that customers affected by these sales were given a fair deal, protected from changes to terms and conditions, and offered an opportunity to gain certainty over their mortgage payments by accessing a fixed rate. Now, you can see most of those letters and the replies on the New City Agenda website, but of course, as many of you know, because it was highlighted in the Panorama programme, UCAR replied to say that selling the £13 billion of mortgages back to the private sector, the option to be offered new deals, extra lending and fixed rates should become available to them. And of course, this turned out not to be true. And then it took for the Panorama programme to expose that, UK Asset Resolution are now claiming to have been misled by Cerberus as to what they would offer these customers. And I also wrote up mortgage prisoner issues into a blog on the New City Agenda website in Northern Rock, what happened to the customers, really trying to look at the possible detriment which have been suffered by these customers. And the APPG on mortgage prisoners was set up in 2019, and we've responded to a number of consultations from the FCA on the modified affordability tests. We've written a number of letters to the FCA, and we've also worked on a number of amendments to the Financial Services Bill. And I think one of the important points of principle is that most mortgage prisoners, they've had a change of circumstances, but it's no fault of their own that they sort of chose a mortgage with Northern Rock before the financial crisis. I mean, the executives, the regulators and the experts failed to see the problems coming at Northern Rock. So what chance would a kind of ordinary mortgage customer have of predicting it? And really, a lot of people are still suffering the consequences of being with Northern Rock rather than being with one of the other banks, which was equally poorly managed but got bailed out in a different way. And if you were a customer of RBS or Lloyds Banking Group, then you can always access a new deal. But for some reason, the Northern Rock customers were kind of kept on a high standard variable rate, and the margins on those rates were increased substantially after the financial crisis. And then when it came to sell off these mortgages, instead of kind of setting the safeguards that people like Lord McFall wanted, they kind of were just sold to the highest bidder. And the people like Tulip Mortgages were given complete discretion on interest rate policy after 12 months. And then even later, when some protections were put in place, they're only required to keep the SVR the same as the level of the third highest of a basket of 15 major lenders. So really the problem was created by Northern Rock. Then people were held by the government on high rates for years, and then the problem was made worse by the way the mortgages were sold off. I think what is kind of frightening to me is that nothing to stop this happening again. I mean, your mortgage terms and conditions, they typically give your lender the right to sell on your mortgage at any time to any other firm just by giving you 30 days notice. And it's certainly come as a surprise to other people.
How was your day?
Who've been with customers of other lenders.
Are you at home tomorrow?
Selling their mortgage.
Good.
That their lender can sell on their mortgage, and luckily, then it becomes a lottery. I mean, sometimes if your lender sells on your mortgage, you could be sold to a high street bank, which is going to offer you a new deal and treat you fairly, but you could equally be sold to a private equity company or a hedge fund, or even a completely unregulated organisation, which is going to sort of manage your mortgage in its best interest, not in your best interest. So as we were, as the APPG and Lord Sharkey, who spoke in the Lords on it, put forward a number of amendments to the Financial Services Bill. We put forward possible amendments to cap SVRs, require all mortgage prisoners to be offered fixed rates, expand FCA regulation, and to require consent before a mortgage was sold on. But I think, as everyone knows, the amendment capping SVRs and requiring mortgage prisoners to be offered fixed rates was passed in the Lords, but then we didn't have the support to get it through the Commons. So in that kind of debate, the Economic Secretary said that the FCA would conduct a review of the data and the impact of the interventions that have happened so far, like the modified affordability test. And I think, again, we're at a kind of difficult point in the campaign because something has happened in that these kind of changes have been made, but we all know that it's not enough to provide a kind of comprehensive solution to most mortgage prisoners. So as we know, the FCA is reviewing the data, and I've met with the FCA to share my views about what they should examine. And I think they really have to conduct and publish a kind of comprehensive analysis of the detriment being caused to mortgage prisoners. I mean, the government, and I'm sure many of you are aware, they always cite the FCA claim that mortgage prisoners who cannot switch are only paying on average 0.4% more than similar borrowers. But we know, and APPG members said during the Financial Services Bill debate, that this comparison is meaningless because it only considers the standard variable rates and doesn't acknowledge that 97% of lenders in the active market give their customers who aren't in arrears the options to access new deals. If you take two customers, and I've used this example before, and APPG members have used it. If you're both paying an SVR of over 4% and you've got a loan to value of 75% and say a mortgage of around 200,000, the one with the active lender could access a new deal at 1.8%, and that'll be a fixed rate, so they'll gain some certainty over their mortgage payments for the next 2 years, which I know is important to many people when interest rates could go up over the next 2 or 5 years. But the mortgage prisoner is stuck on an SVR of over 4%. The mortgage prisoner is paying 5,000 extra a year in mortgage payments, and I think, as we've heard, that places a massive extra strain. If you've got a mortgage of 200,000, it places a massive extra strain on your financial situation. And for many, it's the difference between being comfortable and having a sort of constant struggle to make ends meet. And I think the other point we've made to the FCA is that there should be kind of no averaging out of detriment. I mean, we have met some mortgage prisoners who happen to have been lucky and paying relatively low rates, but you can't kind of put them all together with a group of mortgage prisoners who are paying high rates and say, well, you're only paying the average of 0.4% extra a year. We want to see detail of the range of extra interest being paid. And on customers in arrears, I mean, it's already been mentioned that we're very concerned, because many people in arrears, they're only in arrears because they're stuck paying high standard variable rates. And if they've been able to access reasonable fixed rate deals, then they wouldn't be in arrears. So there's got to be some solution for those customers in arrears as well. And it could be restructuring the mortgage, extending the term, and then being able to switch. But at the moment, it's quite difficult. And of course, customers in arrears can't access the modified affordability test and have to be out of arrears for 12 months before they can do that. And also the FCA needs to pay particular attention to interest-only mortgage customers. I mean, I think we heard from Andre about his experience, but he's not unique there. There's a number of interest-only mortgage customers, and because they've been paying a high interest rate, they arrive at the end of their mortgage term in a kind of worse financial situation than other customers. And you're then kind of referred down a kind of series of dead ends. So you're told to go and get mortgage advice, and the advice might be you're too old to get another mortgage. You're then told to get equity release advice or lifetime interest only. And sometimes the answer is you're too young for that equity release. And so then you've got, is it possible to develop a solution to them where there's a kind of bridge to equity release and they get a kind of extension to the term and, possible overpayment, and then eventually they could take out an equity release loan at an older age. But of course, that requires some individual consideration of the circumstances, and have to look at the loan to value. I mean, for some people I've looked at, the gap is very small between what they could get in 5 years' time and where they could get to, but for others it's been very large. But the FCA is going to have to look at what options are being offered to those interest-only customers, because part of the problem we've encountered is that the guidance requires firms to consider the options and then offer them, but it doesn't require consumers to be offered a particular option, which is, again, problematic. If you're with a lender that has a good range of options and is willing to extend the term, then that's great. But if you're with a kind of inactive lender that's being very inflexible and is kind of offering you the option of repaying the entire mortgage now or facing repossession, then, that's very worrying. And the problem is the FCA and the FOS won't always intervene if you're just not being offered a specific option, which again is very concerning. On the interventions review, I mean, we want to understand why so few mortgage prisoners have been able to switch and what further reforms are necessary. I mean, we originally heard from the FCA that around 2,000 to 14,000 mortgage prisoners would be able to switch. And then later that kind of got muddied because people were putting forward numbers of 125,000 could switch. But of course, we found it really difficult to gain information from the FCA and individual lenders about whether they are making use of the modified affordability test and the flexibilities. And, you know, we would like the individual lenders offering these flexibilities to be identified. And also someone's got to examine the characteristics of mortgage prisoners who are being accepted by these lenders, not who could be, but who are in practice. And then the FCA has got to do some analysis of, you know, how many mortgage prisoners might be able to switch and how many are going to be stuck and for how long. And we also want the FCA to publish the results of its outlier rates investigation, which I think it said it launched in April 2020. I mean, the APPG submitted some information and, you know, we haven't had anything back as to what action the FCA's taken. And I think we want to see the impact of the interventions analysed and compared with some of the more kind of comprehensive solutions put forward by the APPG. I mean, if we just continue with the FCA's current approach, you know, how much will mortgage prisoners overpay in the next 5 years? How many extra repossessions will happen, and how much detriment will be caused? And could some of that detriment be stopped by something more comprehensive? Like, if it's not a cap on standard variable rates, is it a requirement which requires the inactive lenders to offer people fixed rate deals? And again, most mortgage prisoners are not asking for something better than is available in the active market. They're just asking for the same access to fixed rate deals that most of the active market have access to if they're out of arrears. So, you know, we'll be engaging with the FCA on its analysis. Please continue writing to your MP. Please continue to share your story. Please try and switch using the new modified affordability test. You know, if you're successful, then great. But if you're not, then please share your story and the kind of impact it's continuing to have on you. And please ask your MP to join the APPG on mortgage prisoners, and we'll continue to keep them informed of any progress and continue to engage with the FCA as it publishes the outcome of its review. But thank you very much, and I'm ready to answer any questions that anyone may have.
Dominic, that really was absolutely first class. Thank you so much. I can see Richard wants to show his appreciation. Let's please all do that. That was a very, very constructive use of 10, 15 minutes or so. That was great. Thank you, Dominic. I can see Gurk Samra would like to make his point first of all. Gurk, if I can invite you please to be as succinct as you can so that we can get through as many people as possible. Gurk, over to you.
Hi, Dominic and everybody else. Dominic, you said that the terms and conditions of the mortgage, the agreements that everybody signed, allows the lender to sell it to any person, and that seems to be a get out of jail card that's waived quite a lot. Okay, so if I can give you an example of a situation where that isn't true, then perhaps you can use your influence on the right people and get this in. So just, they say that you can sell a mortgage to anybody because it says so. Right, whether they're regulated or not, whether they have a lending license or not, it doesn't matter. Okay, so for instance, say Eddie Stobart wanted to sell off some of their trucks. Okay, they're allowed to sell those to anybody. Okay, anybody here on this meeting tonight can go and buy one, or 10 or 20 or whatever. Okay, they can go take them, they can polish them, paint them different colors, put new tires on them, do whatever they like. What they can't do is use them for carrying goods unless they're licensed as a goods carrier. Right? If they have an operator's license, then they can do that job. Otherwise, they can't. They can't drive the truck on the road carrying goods if they haven't got a HGV license. Right? It doesn't mean that they can't, that Eddie Stobart can't sell you those trucks, but you can't use them. Now, if you buy 20 of those trucks and you want to go and deliver goods to Sainsbury's, right, you can't do that unless you're registered with a HMRC for taxes and VAT, because Sainsbury's won't enter into a contract with you. So it's all very well saying you can sell it to anybody, but does that entitle those people to use it? Right? Just because Eddie Stobart are licensed as a goods vehicle operator and they have HGV drivers, doesn't mean that them selling you those trucks gives you those rights.
Interesting point. Dominic, what would your response be to that? Thank you.
I mean, I think in practice, you know, and we've looked a lot into this at the APPG, and we did try and put forward an amendment to expand the regulatory regime. The activity of owning or managing a mortgage is outside regulation. You've got to appoint someone to administer the mortgage for you, and the administrator has to be FCA regulated. But in practice, the activities which are covered by administering a mortgage are very limited, and just, you know, applying the interest rate, collecting the payments. Whereas the person who actually controls whether or not like fixed rate deals are offered to customers can be the customer, the organization that owns and manages it, not the administrator. And again, the administrator just implements what they're being told to do. So if they're told to put the SVR, to link the SVR to LIBOR and increase it slightly, then they can try and do that. If they're told, look, for interest only mortgage customers, you're only going to be offered the following range of options at the end of the term, then that's what the administrator is going to do. So it's quite complicated, but again, the regulatory regime is not comprehensive enough. So you've got a very limited subset of activities. I mean, I could send something around because we've written about it before, but the activities of owning and managing a mortgage are not regulated or don't have to be regulated, and that's partly where the problem is. Also, the problem of, even if you have got those permissions, you don't necessarily have to do anything about it. I mean, I have seen ombudsman adjudications with Landmark where Landmark had told a mortgage prisoner that you can't have a new mortgage because Landmark doesn't have a lending license. Well, I think that was always a lie, because Landmark effectively always had a lending license, but the fact that it has a lending license doesn't require it to lend or to offer mortgage prisoners access to new deals. So I think there's partly a problem of the scope of regulation, but there's also a problem that even when organisations are regulated, like Landmark, the FCA is not going to intervene to force them to do anything like offer mortgage prisoners new deals. And that's sort of part of the problem as well. Sorry, that's a bit complicated, but it is a complicated issue. Thanks.
It is complicated and very interesting. Dominic, I'll squeeze a quick question in for you before we go to Richard. Richard Seddon. I know you've got some opinions about duty of care. Playing what ifs, would this mess have still happened? Would this horrible and unfair, grotesquely unfair mess still have happened if there was some kind of private right of action or consumer duty in place, duty of care? Any thoughts about that?
I mean, the answer is it may have done, but it would depend on what the FCA did about it. I mean, if people decided that a duty of care for mortgage prisoners would require them to be offered fixed rates, then I think that would be a good thing. And, again, going back to the active market, the FCA did kind of broker a voluntary agreement so that all customers in the active market who weren't in arrears could get access to new fixed rate deals. But they just either weren't willing to do that or thought they didn't have the powers to broker that in the market for inactive lenders and the unregulated entities that own some of these mortgages. So it's partly a matter of lack of clear rules, and it's partly a matter of lack of will. I mean, the new rules would be helpful, but of course that wouldn't immediately change the lack of will within the regulator.
Yeah, because we can't escape the horrible thought that what's happened before could happen again. I mean, it's quite a horrific thought. This could still happen again. I mean, that's just awful. Thank you, Dominic. We'll go to Richard and then we'll go back to Dominic, then we'll move on. Richard Seddon, please be as succinct as you can. Thank you.
Yeah, I was just wondering, Dominic, and thanks for your talk. It was fantastic. I'm just wondering, are you guys aware, the APPG aware, that, for example, just down the road from me is the Bradford and Bingley old headquarters, which has got, I think it's either Cerberus or Computershare, which own Topaz, which own, all the other one owns all the rest of them, and NRAM or UKAR or whatever they call them, they're in those headquarters. So there must have been some dodgy dealings going on. Everybody you ring at a call centre, they're from Sunderland, so clearly we're from Northern Rock. I mean, it's not beyond the wit of man for somebody to go, there were some big backhanders gone on here. And why aren't people investigating that, like the APPG, for example? I just don't know why people aren't getting to the bottom and following the money. Because all this money is going overseas, from what we can gather. They don't pay taxes. We pay massive premiums. And I don't know, is the APPG aware of all of this?
I mean, I can speak for myself rather than speaking for the APPG. I mean, I'm definitely aware of the tax structure of Cerberus and where the money ends up through the various Dutch holding company to the Cayman Islands owned funds, and of course the Treasury's view that it couldn't take into account that less corporation tax may or may not be paid by these entities when it's deciding who was the highest bidder. I mean, I'm also aware of bonus arrangements for UCAR executives, which were linked to certain metrics, which, you know, I think there was a big payout in the year that their mortgages were sold to Cerberus for whatever reason. I don't know what the reason was. I can only go off what was published in the annual report. I mean, again, people are always willing to or able to look into that, but I don't think it's going to, you know, do much to alter the reality of most people's situations. I mean, I really wish that, you know, I personally, it's a matter of personal regret for me that I wasn't more successful, and, you know, when working with Lord McFall to try and get some safeguards put in before these mortgages were sold, because that would have been a lot easier. We just did try, but, you know, we were sort of again told that people would be offered new deals and fixed rates, and, you know, that UCAR, I didn't for a moment think that UCAR would then come out 2 years later and say, well, actually, we were misled by Cerberus, and we thought Cerberus were going to offer these people new deals and fixed rates. And the answer is, well, you know, you should have written that into the contract. But I don't see the UCAR executives volunteering to give back any of their bonuses or having any of it clawed back because of the fact they didn't write it into the contract. Sorry, I've tried to answer your question. I know it's not a satisfying answer. You know, it's not a satisfying situation, definitely.
Again, thank you, Dominic, for your candour and your forthrightness in your answers. We're going to go to Nicholas Wilson briefly, then back to Dominic for any final comments before we move on. Nicholas.
Thanks, Andy, and thanks, Dominic. You've been a big support to me over many years with the HSBC thing and so on. This is more of a comment than a question, but I'd be interested in your response. And I'm referring back to what Richard was saying, and I've said this on these forums before, Andy. You know, we all talk about the situation, but we never talk about the people. All these situations are created by people, and people make money. And we never focus on that. It's safe for me to mention Richard Banks because it's public domain information, but he was the CEO of UKAR or NRAM, I can't remember which one, and he's now a director of Topaz. He would have been involved in negotiating the sale of government assets to a private company, which he now benefits from. Now, that's public record. I'm not saying anything that's actionable. Why aren't these people investigated? Why is this allowed to go on? All we you know, we people that suffer are suffering and trying to fight the system, but it's not the system, it's people. And the people are never held to account. But that's really a question to Dominic.
Yeah, I mean, I can't really say anything more other than to agree with you. I mean, we're getting very close now to the time when Adam Applegarth's going to get his, the ex-CEO of Northern Rock's going to get his very large pension, which is going to start to be paid out in the next sort of 2 or 3 years, potentially. And again, the way the bailouts were done, the people weren't held accountable, and ultimately, many of the Northern Rock customers have ended up paying much more than they would have done otherwise. And particularly as, you know, the way the mortgage market generally works, the access to short-term deals, and as you kind of pay off more of your mortgage, you get a lower loan to value, and you benefit from that by paying a lower rate. And those have been sort of completely denied to the Northern Rock mortgage prisoners and the customers of other lenders. And of course, being held on the SVR is very worrying for lots of people because you can't gain any form of certainty over your mortgage payment. And then when you get to the end of the term, as we've already heard, you're offered the choice of immediately repaying all of your mortgages or sort of facing repossession. And it's not really surprising that, you know, many people go for the kind of what's called an assisted voluntary sale, even though it's in many cases it's not voluntary. And yeah, I mean, the people weren't held accountable, and we're storing up greater problems for much later unless we take action. So as I said, keep writing to your MP. We'll keep working, and, you know, hopefully we will get something out of the FCA eventually. But, you know, I share your frustration that it's not quick enough. And, you know, in the meantime, lots of detriment is being caused to lots of people, you know, in my view, very unfairly. But no, thanks very much for having me on, Andy. And yeah, everyone's got the APPG email, and yeah, I mean, everything's read, even if it's not immediately responded to. So thank you very much.
Dominic, thank you very much indeed. And just before we show our appreciation to Dominic again for his talk, I just want to absolutely agree with the point Nicholas just made, which chimes perfectly with something Alan Campbell was talking to me about last week, this idea of actually focusing attention on the individuals. Who are the individuals that made the decisions? In what way could they or might they be exposed, vulnerable? If we can't get the organizations that have done bad into trouble, then what can we do about the individuals? So I absolutely concur with what Nicola's just set out there. I think that may well be the way to go. It's as if some of these organizations have got protective cloaks around them, protecting them from regulatory enforcement and police enforcement and fraudulent prosecutions and all the rest of it. Let's please show our appreciation to Dominic, especially as he's rather unwell. That was a great session, Dominic. Thank you very much indeed. You really do know your stuff. You really do know your stuff. Let's now go to Stephanie Orr. Stephanie, thank you very much indeed for agreeing to be part of today's programme at relatively short notice. We're very keen to hear about you and your organisation, the work that you've been doing. You've got about 5 minutes or so. Over to you, please, Stephanie. Thank you very much.
Thanks, Andy, and thanks so much for the invitation to speak today. So I'm going to speak to an issue that affects a subset of mortgage prisoners. And when Martin was speaking before about being a mortgage prisoner, having a catastrophic problem with your mortgage, economic abuse is another catastrophic problem to a mortgage, and the two that are experienced by a subset of this group really do reinforce each other in a really incredibly difficult situation to be in. So I am a policy officer for Surviving Economic Abuse, and we are a domestic abuse charity. So I just want to say that if anyone doesn't want to listen to 5 minutes of domestic abuse for whatever reason, please do just mute me now. And for anyone who's wondering what economic abuse is, it is a subcategory of domestic abuse whereby your economic resources are used by an abusive partner to control you. So it might be your income, your benefits, your savings, your money are stolen from you, used so that you can't access them, or it could be your other tangible resources, so all the basic things that we need. Someone earlier was talking about utilities, it can be food, maybe your car keys are hidden from you or thrown away so you can't use your car. And what this really does is entraps people, because we know if you don't have the economic means to be safe, then you can't leave, and you're trapped with an abusive partner. And something that I'll come back to shortly as well is we know that when people do leave abusive partners, if they do return, the primary reasons they give are economic. So it's really important that people have a strong economic foundation and security net for safety. Okay, so now what does this have to do with mortgages? We hear from a lot of people who experience economic abuse in relation to their mortgage. Something that's really common is that when there's a joint mortgage, when the fixed term comes to an end and it switches to the SVR, an abusive partner will refuse to switch the mortgage rate. So for many people, their lender would allow them to switch to a cheaper deal, but the abusive partner who's also on the mortgage will not allow them to. So these people are trapped paying, perhaps hundreds of pounds extra in interest every month, not necessarily because the lender won't allow them to switch, but because the abuser will not allow them, which, to their own financial detriment, it's quite clear act of sabotage to try and cause arrears, to try and push towards repossession as a form of abuse. And another really common thing that we hear is, refusal to separate, even where there are court orders that say that the house should be assigned to one person and one person should take over the mortgage. The abusive partner refuses to go through with that process. And of course, all of this can have an absolutely huge impact on people, as I'm sure you're all really well aware. We hear of, many cases of homelessness, of women with children living in caravan parks after repossessions, people really facing financial ruin. And often this can be facilitated by the regulations, by the legislation that's in place, and by the lenders themselves. So we're really trying to work to address this issue from the top down, because of course this all needs legislative change quite often in order for things to be enacted on the ground. So of course this impact is absolutely massive. And as Martin was saying before about you having a catastrophic issue, this is really worrying for us because we know that it's so fundamental that people have control over their economic resources, have economic safety. If you don't have that, you can't be safe. So it's really worrying to hear about what people are facing today, and knowing that a subgroup of the mortgage prisoners are facing both of these issues. Now we're working really hard to try and transform things to empower people so that they do actually have the options, so that they can separate their mortgage from an abuser, so that they can switch their rates. And we're really, really supportive of all the work that's happening in this space too. I just wanted to mention a few things that if anyone, has resonated with anything I've said today, and you think you might need some support, or maybe you're not sure if you're experiencing economic abuse, but you think you might be, please go to our website. It's survivingeconomicabuse.org. We have a lot of information on there. Do contact your local domestic abuse service if you do need support. We do run a specialist service in partnership with Money Advice Plus. So as many people have mentioned today, it's not just the mortgage that there will be issues with, but often lots of debts can snowball from these issues. So we run the specialist financial support line for victims of domestic abuse. Now, on that line, they don't just look at debts and help you to come up with a repayment plan, but they look with an economic abuse lens. So if you have any debts that an abuser has created in your name, maybe coerced or by fraud, they will look at trying to challenge the liability of that debt and see, for example, if it can be written off or something fairer can be done with it. So please do check out our website for the details if you think that might help you. And I also wanted to mention that for anyone who needs support and assistance for a family court matter, perhaps to separate a property from an abusive partner, usually just having a property and being a homeowner in and of itself can mean that you're ineligible for legal aid. However, at the start of this year, there were 2 judicial reviews that changed the rules around legal aid eligibility. So it's worth looking into it if that's something that you need, because separating economic resources from an abusive partner does fall within the scope of legal aid. So if you think that might apply to you, please do think about contacting your local solicitor's firm to find out more. And yeah, thanks again for inviting me to speak, Andy, and I'm happy to take any questions people might have.
Stephanie, thank you so much. I've been doing what I do for 7 years or so, and it just completely baffles me how many ways people create to hurt each other. It's just heartbreaking hearing what you just described. I admit to my naivety. I did not know that kind of thing was going on. It's absolutely shocking. Thank goodness that your organisation exists, and I think I might have put a link to your website in the chat earlier. But could you please put a link to some more information, because I think there'll be several people on this call that could potentially either directly benefit from what you've been explaining, or may know of others who can. I think Gavin Palmer's put his hand up to make a point. Gavin's been an ambassador of the TTF for several years, always comes at the thing with a straight talking point of view. Gavin, as succinctly as you can, please share your point. Thank you.
So one of the things that uncovered the scandal with RBS, with the GRG unit, was seeing a pattern repeated across different sections and different companies and commentary in the media. And that pattern was that the NatWest banked company customer, or Ulster Bank or Royal Bank of Scotland Bank, was combined with generally KPMG and Deloitte, or and then some other insolvency practitioners, of which there were a certain set, to systematically go through. And one of the things that was interesting in that was they would also systematically seek to undermine the ability of a founder owner to retain assets or to retain his credibility. And they would set out to undermine his credibility with the Inland Revenue, with MPs, with the local community, by having him promise something that they knew he would not deliver, but he might think he would be able to deliver. And the same is also come out in terms of the Treasury, in terms of the deals, that they must have also been targeted with the same similar method, because eventually in all the GRG stuff, and there's some things, there's stuff where HM Treasury have approved certain loans, and then they have thus been able to be compromised or threatened or intimidated, i.e. individuals. And one of the people that was doing that is now the governor of the Bank of England, unfortunately, even though there were people who recommended against it, and who also, that the governor of the Bank of England, Bailey, who also covered things up with the FCA, etc. So we need to, in dealing with this, You need to look at previous patterns and scandals. Cerberus also took over Torex Retail PLC in 1997. That's before the financial scandal. And they bought it for 201 million when their offers are 350 million plus debt. So a lot of the tactics I saw and picked out from that, and then seeing other similar situations. So don't underestimate, we map out the scale of the opposition we've got. Sadly, also, these regulators have been absolutely abysmal in actually regulating, fining, or punishing these organizations, whether unethically or not. And in US terminology, Cerberus should be classified as a bad actor. And terminology bad actor is well known in America. Basically, it allows you to decline them in a movie because you consider them a bad actor. Now, that doesn't require legal proof or anything else, but it's a way in which you can sort of punish these sort of companies or get them to behave properly. I don't know the scale of visits or meetings that Cerberus have and related parties with MPs and the committees, or even the Chancellor. I would expect it to be quite extensive. And Northern Rock and Banking and the mortgage loans, I objected at the time about Cerberus, and it seems that there are some who wish it to be taken over, or wish them to carry on doing it as the solution.
Gavin, we'll hold it there. Thank you very much indeed. Thank you. Does anybody have a point that they'd like to make that relates to what Stephanie was speaking about just now? A very, very important topic. Anyone else for a point relating to what Stephanie spoke about? Dominic, back to you. Thank you, Dominic.
Right. Thanks, and thanks, Stephanie, for that talk. Is there a link of or a list of resources that the APPG can refer people to if they've got a kind of an economic abuse problem when they kind of approach? Because yes, there have been quite a few mortgage prisoners who have approached us who have part of that problem. I don't know if there's a specific list of resources. And the other problem that has been encountered is that while the lenders claim to have a kind of policy on vulnerable customers, it's always been very difficult to find out exactly what that means at the individual lenders and how they deal with people who've suffered economic abuse. So any kind of insight you've got there would be very welcome. Thanks.
Yeah, absolutely. So yeah, we have a wealth of resources on our website, because people who are experiencing economic abuse with their mortgage, often there are different forms as well. I mean, it was interesting, the person who spoke formally talking about, I know it was a different context, but a deliberate undermining of someone's, just generally, we see that, deliberate undermining of credit rating, of any accounts that people might have, just to really sabotage their ongoing economic security. If you look at our website and signpost people to that, because there are so many different areas where we've created information for people. And then on your second point around vulnerability, we've worked out a lot with the FCA around the new vulnerability guidance, and we have managed to get domestic abuse, including economic control, listed in the guidance as a driver of vulnerability. So it is something that firms should be adhering to and be recognising as vulnerability. We work with Lloyds Banking Group, and we know that some other organisations in our field work with some of the others. Some are further ahead than others. We get better responses from some, so there's a lot of inconsistency across the sector, as I'm sure you can imagine. With the specific issue around interest rates and abusive partners refusing to switch, we have seen some successes in some firms allowing people to switch anyway, because they can see it's just deliberate sabotage. With one firm, it did take a Sunday Times piece for them to reverse their decision. But yeah, sometimes there is discretion that can be used by lenders to support people who are facing issues, which is important to bear in mind.
Thank you very much, Stephanie. Time for one more, if there is one further point to relate to Stephanie's talk. Mr. Mark Wakeham, please very, very briefly introduce your point, and we'll go back to Stephanie, then we'll move on. Thank you, Mark.
So I've been speaking with Rachel and Jill and the campaign team for a couple of months now. I'm a former banker for my sins, used to securitise mortgages and worked for a specialist mortgage lender before the financial crisis. And I've been when I was made aware of the issue, I was just felt compelled to try and use my past experience to help solve it. And to my mind, the solution is really quite straightforward well, it's straightforward in theory, but is proving very hard to mobilise in practice. To my mind, the government, or past government, is responsible for the situation of mortgage prisoners. And I keep saying to people that doing nothing is not a zero cost option, because of precisely the issues that Stephanie was just detailing, and the more wide-ranging issues that sadly there are too many harrowing stories of people needing to make use of social care, falling on social services, and ultimately if people's homes are repossessed, they're going to in all likelihood be needing to call upon social housing provision. So I've been connecting with anybody and everybody that could possibly be of use, and I had a recent conversation with a sympathetic policy advisor to the government who did just request that I don't name them. But he was very straightforward in his advice. And I'm afraid this isn't entirely positive news. When I outlined the social costs that we are all too familiar with, I said, surely it makes more sense to provide a solution today to avoid those costs occurring in the future. And he said, that may well be, but as far as government and ministers are concerned, there is a system in place, and they would rather deal with the costs as they fall due, as people have to make use of them, than invest in a solution today for which a cost then becomes payable. So it's a most unfortunate perspective, and one that I'm working hard to change. But I just thought I should share that the view from the inside is one of deliberate delay and obfuscation, and do anything and everything possible to avoid the provision of a solution on the social side, because that cost would need to be borne sooner rather than later. And there is a bit of a head in the sand approach, hope that it's not as bad as people say. And on the broader topic, to my mind, a solution would involve the creation of a new socially oriented mortgage lender to provide a release product for prisoners. And that would require an element of government guarantee, not funding, just government guarantee to act as a first loss piece. But again, my man on the inside tells me that that would not be tolerated or supported in any respect by the Treasury at the moment, because their biggest fear is that to do anything, to be seen to be doing anything to directly support the cases of mortgage prisoners, is in some way admitting culpability or liability for their case, and would therefore open them up to a much broader legal claim for damages and interest and all the rest of it. So it's complicated. Well, the solution is straightforward in my mind. The delivery of it is, complicated.
Thank you, Mark. Thank you very much indeed. I would not be at all surprised if your insider, so to speak, is absolutely right. It's as if the system's more interested in protecting its own interest than the rights and wrongs of the situation, or the justice of the situation. It really does make you want to scream and shout. And I'm not somebody being directly affected. If I was somebody directly affected, I'm sure I'd be screaming and shouting as loud as I could. Thank you, Mark. Stephanie, wonderful talk. Really pleased that you've had a chance to tell us all about yourself and your organisation. It's clearly extremely relevant. So thank you very much indeed, Stephanie. Can we please show our appreciation to Stephanie? Thank you very much indeed. It'd be great to have you back again, because you're dealing with some very, very deep-rooted problems in society. The weaponization of finance is essentially what you're talking about there. And it's sounds awful. Sounds absolutely scary. We're going to go to Rachel Neale. Rachel probably doesn't need any introduction at all from me, so I'm not going to spend time introducing Rachel. What I am going to do is repeat what I said earlier. TTF has been remarkably impressed by the work that Rachel and her colleagues have been doing. Really, really, really impressed. Lovely people to deal with. Rachel, over to you, please, to take us through to about 8 o'clock-ish. We can go over if you want to or if you need to, no problem at all. Rachel, over to you. Thank you very much. Thank you.
Thank you, Andy. So first of all, thank you again to all the speakers that have attended tonight, and particularly thank you to Andy and his team for organising the event and for Andy to host it. And if we can give Andy a bit of appreciation, please, because without him, and you know, we wouldn't be able to do it. So I'm just going to briefly go over what's been happening from our side over the last few months. So this is our second event, as you know, and I hope everybody's enjoyed it just as much as the first one. And what we have seen in the last few months, even more so than ever, is that the experience of impact and toll that is being taken on board from the situation. It continues on everybody and so many of you in so many ways. The problem has been left to fester, rot, erode, and causing a multitude of other issues on top of being a mortgage prisoner. We hear about it every day. We now find ourselves living a crisis within a crisis. As the economy recovers from the pandemic, we are seeing our money stretched even further with increasing prices on food, energy and fuel due to supply issues, on top of so many losing their jobs, not to mention next month's removal of the £20 uplift on universal credit. From the beginning, we've been branded by the government, press and the whole financial industry for that matter, that we were bad payers, have huge debts, we were irresponsible and borrowed more than we could afford in the first place. That suits the government narrative. And as Mark so well has just put it, we all understand why, because they want us to believe that we're not victims, that we did something wrong and they did nothing wrong. So that obviously shows us why the SVR cap then was turned down, even though we know it would have given so many of us a lifeline and huge financial relief. I also know the disappointment it brought to everyone when it was rejected by the government. But what we did see through the campaign is the passion of a group that wholeheartedly got behind it and changed the thinking of so many in the press, the banking industry, MPs and Lords. Now we have to wait until the end of November to the FCA to conduct a further review for their original assumptions. And yes, it is assumptions, that John Glenn announced that a review in Parliament in April. He stated it was a high priority of his to find a solution to this issue. I'm sure you will feel as I do that John Glenn has created yet another void for us all, along with those that want to help us. While we wait for that outcome for a further report, with which no doubt will be delayed until next year before he or the Treasury even start looking at the possible solutions. In August, the FCA invited us to meet with them to put our thoughts forward on their review. I expressed that I am personally very upset at their recent admission that they've been using assumptions for the past few years rather than actual figures to establish the number of mortgage prisoners, firstly, that there are. We have always questioned the validity of these figures. These are the same figures used by the government to oppose the SVR cap amendment. MPs and Lords, the banking sector and press have all been misled into believing the false narrative, and yet again, we've been left to suffer as a result. Mortgage prisoners have spent almost 15 years being overcharged and pushed out of the mainstream mortgage market. And this is misled, and this misled data has caused so much detriment to us. Threats of repossession are at an all-time high, and homelessness, along with prolonged destitution, ill health, financial depression and family breakdown. The list goes on. After speaking with the FCA at length about their review, we made a long list of suggestions. A link to the reports will be put in the chat. That could see our situation resolved with the cooperation of all parties working together towards the goal. Some of the key expectations were that due to the biased data presented in previous debates, the SVR cap must be put back on the table before Parliament, even if it is only a temporary measure until a permanent solution is available. I take on board what Martin Lewis stated, that he did never believe that it was going to be a solution, but it is a solution, even if it was a temporary one, to get people from being on this high rate back onto a normal rate. The affordability criteria must be revisited. There needs to be some kind of government-backed guarantee scheme for mortgage prisoner, either a new mortgage product or equity loan on similar lines to the existing Help to Buy scheme to reduce the risk felt by mortgage lenders. Stop firms overcharging for arrears and placing incorrect markings on customers' credit files, which is what we've seen a huge increase in, and when they're at their lowest, and also receiving in arrears, they're receiving up to £50 a month in charges for being in those arrears. So I would also like to make clear that I did invite the FCA, UK Finance and the Treasury to join us tonight, as they continue to tell me on a weekly basis that we are their priority and they are keen to understand the harm of mortgage prisoners. They all declined to come this evening. I firmly believe the only option to help mortgage prisoners is to have a fair mortgage product for us all to exit onto, despite arrears, negative equity or affordability testing. I know at the moment there are so many feeling broken on the same hamster wheel, but over the last few days, I found out through our campaigning we are changing areas of finance. We are also a heavy nuisance to government, and now more than ever, everybody has a part to play to continue getting our voices heard in this grossly unfair situation for it to stop. We continue to work behind the scenes on areas that will help mortgage holders and mortgage prisoners keep their homes, which brings me on to Hope. Hope will provide a cost-effective end-to-end mediation and support service for homeowners who are facing homelessness through repossession by liaising between lenders, homeowners and the courts to avoid families being placed in emergency local authority accommodation, reducing pressure on courts and saving key stakeholders significant time and effort. And finally, I'd like to say a huge thank you to our admin team who work on mortgage prisoners and Hope. They work tirelessly as volunteers to help and support all mortgage prisoners and homeowners.
Rachel, thank you very, very much indeed. Can we please show our appreciation to Rachel, not just for what she said just now, but also for the tremendous work her and her colleagues have been doing for a considerable period of time. It really is outstanding. I really don't know what TTF can do to help. I really don't. All I do know is that we're happy to try to bring everyone together from time to time, have meetings like this, try to create a bit more momentum and try to create a bit more awareness of the issues. And if it helps, great. And I'd be very, very happy to run another session like this in X months' time. No question about that at all. We'll just carry on doing our bit. I think the one thing we must not do is give up. Who knows? It might take a complete change of government. I'm not making a political point, but who knows? You know, sometimes things like a change of government completely changes the landscape and things get looked at very differently. Who knows what might happen? All we do know is if we give up, things can't happen. If we carry on, they might. Thanks again, Rachel. I'm going to go to Mr. Neville Heron. Neville, please make your point. Thank you very much.
Two things. One is about the compensation that Martin was on about, and I believe that it was an individual one that was in arrears that was wondering if they could get compensation back for the arrears that they'd paid. And I believe it was about an individual. And the reason he said that would more or less be impossible is because there'd be a multiple of finance institutions for different people who were in arrears. It didn't relate to the compensation that Arcade Parker is chasing. That's my opinion. The other thing was about retirement age. I'm past retirement age. I'm 73. The mortgage company took me on knowing that I was well past retirement age. They knew I wouldn't finish my mortgage till I was nearly 80. They did let me remortgage to a fashion, not a very, very good rate. But then they asked me to take advantage of their advisory people. So I took that on, went through it all. They said if I wanted to remortgage and get a better rate, I'd have to pay a sort of an exit fee, and it actually worked out more than if I stayed on the rate that I was on. They also pointed out that my mortgage went well past what their retirement age would be, what they would normally give a mortgage to. But at present, we're carrying on, and I'm carrying on up until I retire. Well, I have retired up until the end of my mortgage. So some will, if they've took it on knowing that you're going to go past retirement age or past what they would normally give a mortgage, that's their responsibility. They took that on as a liability when they took you on from another building society.
Thank you for sharing your point, Neville. Thank you very much indeed. Thank you, Neville. Let's go to Nicholas Wilson, who's got his hand up again. And if anybody else would like to say something, then please raise your hand either literally or digitally. Nicholas, to you.
Yes, thanks very much, Rachel. I've got an appointment to talk to that woman tomorrow. But what I wanted to say, and it might sound a little left field, but because I've been a financial campaigner for many years, I have been supported with my finances by a very wealthy finance advisor from Scotland, who's been very generous and made it possible for me to keep paying my mortgage. He was an anti-vaxxer, a prominent anti-vaxxer on Twitter. 2 weeks ago, he died of COVID, which put me personally into my particularly difficult situation. And Rachel jumped in and has offered to help me. But I just want to say, get the vaccine. Really.
Okay. Okay. Thank you. That is pretty left field. Everyone's got their own views about that matter, but thank you very much indeed, Nicholas, for sharing yours. And it's I'm sorry to hear about the demise of the person that's been supporting you over very many years. Thank you, Nicholas. Would anybody else have a point that they'd like to share? Otherwise, I'm very happy to start wrapping things up. Jacqueline Lee Liz, I hope I've pronounced that correctly, Jacqueline. Please introduce yourself, Jacqueline, and make your point. Thank you.
I think Martin was right that we've all got different problems. And some of us, like me, I am with an active lender in the sense that it's Lloyds Bank is the ultimate owner. The Bank of Scotland won't give me Lloyds Bank rates so far. Now, Rachel's been of great help, but at the end of the day, is Martin right that we need, unless we all sit on the M25, etc., do we actually need somebody that they will listen to, that enough of the country will listen to? And is there any way, if we don't as a group know anyone, is there any way we can get hold of somebody, and instead of just targeting our MPs who need a lot of persuasion, and some of them are rude, they don't even respond. Is there any way of contacting somebody that can get in the press and really make a noise? Because I, for one, I used to be like everyone else, thought it was my fault. And I won't bore you guys with my long story, but the fact is that it's only recently I realized it's not my fault. I'm paying rates 5% more than anybody else since 2008. And I have a very large mortgage because I made the choice some while ago of supporting my family.
I understand. Jacqueline,
so,
thank you.
But even the smallest of mortgages, if you haven't got, whether you need £50 or 50 million, it's the same thing for the individual if you haven't got it.
Yeah.
It needs somebody that can really speak, that will get listened to.
It occurs to me, Jacqueline, that there's already been a lot of publicity around this issue. I don't think the issue is a lack of publicity about the size of the problem. It seems to me to be the intransigence, if that's the right word, of there's a lack of political will to support the mortgage prisoners. I think, to my mind, it just boils down to that. I'm not making a political comment. I'm not making a party political comment at all. It just seems to me that this is an awkward issue for Parliament. And it might be that it's an awkward issue for Parliament because Parliament's partly to blame.
Responsible, yes, I agree.
You know, Parliament,
I agree.
Parliament should never have allowed the sale of the mortgage books in the way that it did. And the irony on top of ironies on top of ironies is...
But they're still doing it, that's the problem.
And this is a problem that is fundamentally caused by circumstances brought about by the global financial crisis, brought about by the banks. So we end up with the banks causing the very root cause of the problem in the first place. and the problem manifests itself in so many ways. So to my mind, the only real solution is going to come if something happens to change the appetite in Parliament to kind of hands up, yes, we were at least partly at fault. Yes, you poor innocent people have ended up paying a big price as a consequence of the lack of due diligence that was undertaken when the books were sold. Yes, let's have some process to settle the books and put things right. To my mind, that's the logical way forward. But there's a long list of issues that don't seem to be getting treated fairly at all right now. And that's why I wonder if the root cause of the problem is a lack of political will. I don't know if anybody else has any other points on that.
But Martin just said, or somebody said, I think it was Lee, in fact, we need to shout. Martin said we need to shout loud. Lee Burkett said his words, I forget the exact word, but basically he meant we really need to collectively force the issue. Andre has just made a point. If there's a fear of liability, will we ever get them to agree?
Well, if we just go from where we are right now, like you said, in terms of the Treasury, they don't want to accept liability, and I'm sure Cerberus have very aggressive lawyers, as I know, and they will try and hammer anyone. The other choice is that the government says we're going to have an experiment in a few particular areas, like, for instance, this mortgage box book owned by Topaz, Northern Rock, it happens to be most of the Bradford and Bingley, Northern Rock, and some HBOS sections. And the government has, there's several banks that are backed by the government. It wouldn't need that much money in terms of the gearing, and basically say we're going to change the legislation to say that these customers, just as an experimental basis, have an option to take out a mortgage and have it transferred to this state-owned, kind of reliable bank. This will be the rate. It's not going to be the cheapest. It'll be like, 10, 15%. 20% from the very cheapest, something like that. So it's going to have some margin, but it's going to be below the average. And anything below the average will say a huge amount, because most of these mortgages are at the very top. And if the numbers are roughly whatever they are, then there's a requirement that they have to be notified, as this is an experiment in terms of resuscitating the economy. And HM Treasury can support this bank, preferably two, because otherwise you can bet that Cerberus will nobble the employees and the people in that bank. So if they have two, they say, well, you need to go to him, and he'll go, well, you need to go to him, but you get the mortgage. So that's the solution for HM Treasury, if they're willing to take it up and relieve an ongoing problem and relieve themselves of liability, because you're not accepting any liability, you're just saying, this is it, what so? They agreed that, this is now, and we're just going to see how many people actually understand their finances and take this up. It will need to have a government guarantee. Bank of England could even make up their own bank account for it. And then we would be able to clear out a large things, because I see no moral or ethical obligation to allow Cerberus to extort more money from UK customers and treat so badly other examples of their ownership without some check and balance, which the regulators are clearly not willing to provide. Neither seems to be the HM Treasury or the Bank of England, because basically they've all been compromised, same size, because it's been a system, and most of the financial industry makes a benefit out of that system.
We'll hold it there, Gavin. Thank you very much for sharing your thoughts. We'll be wrapping it up very shortly. Does anybody have anything they're itching to say before we bring tonight's session to a close? Just wave at me if you do. Otherwise, Mr. Adam Wynne, go for it, Adam. We've not heard from you, I don't think, yet. Adam, please make your point. Thank you, as succinctly as you can, because we do want to wrap things up shortly. Adam, over to you.
Hi, thanks. Appreciate that. Sorry for the late interjection in this. Been busy all evening, so I've only just got into it. Can I just revert back to what the previous gentleman was saying there, that I think the fundamental matter with this situation is your mortgages have been sold off. They've been sold off to investors. A overseas investors. To simplify that, you can't suddenly just expect the government to go to these investors and say, we need to buy those mortgages back now.
Well, I've got no idea how that would work in practice. I really don't know. But thank you very much indeed, Adam, for.
Sorry, with respect, in practice, it wouldn't work because they've already offloaded those books to investors and, you know, non-regulated, whoever they are. But the government can't just take those mortgage books back from these investors who already own them.
I understand. Thank you very much indeed, Alan. Thank you. We've got time for one more before we close the session. I'll go to gallery view so I can see everybody. Wave if you want to say something, otherwise we'll bring the session to a close. Next time we have one of these events about the mortgage prisoners, of course we'll ask Dr. Alla Kobliakova to speak once again. But can I just remind everybody that we've had some great input from some very, very good speakers. We've had Martin Lewis himself. Isn't it great that he took time out to be with us? And he seems like he's up for the fight. He doesn't seem to be losing his commitment or determination at all. If anything, he seems to me like a very, very resilient and resourceful man who wants things to be improved. So that's great news. We've also had the Buchanan and Dominic Lindley in relation to the all-party parliamentary group on mortgage prisoners, sharing their thoughts. We had some shocking stuff from Stephanie Orr. I've learned even more ways that human beings are finding to hurt each other and to harm each other. Really, really shocking. And of course, we've also heard from Rachel Neale. Plus, we've had lots of other people chipping in with various thoughts and ideas and points and questions as we've gone. So thank you all very, very much indeed. We'll run another one of these sessions if you want us to. If it helps, great. If it doesn't, we can just take solace from the fact that we're trying to help. That's all we can do. Thank you very much indeed. Have a good rest of the evening. Thanks, folks. Thank you. Bye-bye. Bye. Good night.